All right, ladies and gentlemen, let's start. If uh, if you guys don't mind, we're gonna start the masterclass, and I'm gonna share my screen. All right. All right. Well, welcome everyone. Hello, and thank you for attending this masterclass on digital payments and mobile wallets. I just wanted to start off, first of all, by thanking the Startup Academy and Creative Zone for organizing this fabulous session. Um, I am Khalil Alami, the founder and CEO of Telr. Let me give you just a quick introduction about myself before we jump into the heart of the subject. Um, we started Telr back in 2014 when online payment options were very limited in terms of services, customizations, or were simply too expensive for merchants to go online and accept payments. So we saw this opportunity and decided to fill this gap in the market here in the GCC, and we started this from Dubai. We were obviously when we started the startup, and we had to navigate the different hurdles and the legal landscape of Dubai when we started. Of course, just like any other startup, there are certain obstacles along the way, and you go along your way to try to overcome them. But we were very fortunate that the government here in the UAE plays a vital role in facilitating our operations in order for companies to get started. Not only does Telr integrate with e-commerce platforms across four companies in the UAE and Saudi, but also we facilitate the ability of the merchants in a very easy way, while having a very highly secure API that is designed to seamlessly integrate the popular, shopping carts like Magento, Shopify, OpenCart, WooCommerce, PrestaShop, to name a few, along the side with mobile and web SDKs for various merchants applications. So our APIs handle the whole payment flow from A to Z. They remove unnecessary steps that could come in the way and complicate the process. So it's a very powerful tool for entrepreneurs to easily connect their websites or mobile apps to our payment gateway swiftly and quickly instead of going through a lot of time-consuming steps. So lastly, about Telr, I'm very proud to say that earlier this year, we won the Payment Gateway of the Year award. And that's it about me and Telr. Now, I'm very thrilled about this class and giving it. This class would be split into six different sections. One is digital payments. The second is introduction to digital wallets. Then we'll move on to contactless payments, and then into integrating the payment options within the social media and messaging apps that we see. Then we move on to super apps, and then lastly, biometric payment options. So to kick off the digital payments, so what are digital payments? Digital payments are simply ways of paying without using physical cash. Instead you use electronic devices, maybe like your phone or through your computer or a credit card or a debit card, maybe prepaid card in some instances. Both the person paying and the person getting paid need to have some sort of a bank account in most cases. Use online banking maybe, or have a device to make that transfer and use use a bank as a service provider or a service provider to help finish and complete this transaction. So it's all about using technology to handle payments without really needing actual paper money or cash. Cashless payments have existed since the beginning of civilization, as we know, when people used to barter or trade to get what they want. And throughout history, we've moved from bartering and created currencies and formed an economic system. But the most significant aspects of the modern financial landscapes was credit cards, and then as we segue into the digital payments. Now, this is just a little bit of history about the earliest forms of digital payments. I'm not going to go through all of this. I just wanted to mention where that starts. Back in 1871, this is quite some time ago, when Western Union just introduced the first electronic fund transfer in the United States, and that was one of the earliest forms of payments. Then we move into the 1950s, where a little bit more recent, where Diners Club International, established its first independent credit card company, followed later on by American Express, that morphed into the plastic card era. Then we'll go over to the 97, where the first digital e-cash was introduced, and allowing anonymous online transactions. But then later on in the early 2000s, or let's not skip the 90s, where PayPal entered the market and became one of the first global payment service providers, and that's where the evolution of digital payments started. In the 2000s, in the early 2000s, smart cards were embedded with microchips in certain parts of the world. This was introduced. These chips are also known as EMV, which is Europay, MasterCard, and Visa company. It's a coalition where they standardized the form of that chip and PIN technology, and they added an extra layer of security on the credit card transactions. And lastly, in the 2010s, the rise of smartphones, mobile technology, digital wallets, and mobile payments, such as Apple Pay and Google Wallet, Samsung Pay, you might have used. These platforms allowed users to actually store credit card information on their smartphones, enabling them to make secure online transactions. So from a future of credit cards perspective, looking ahead at how these credit cards will work in the future, there are some interesting changes that we might see on the horizon. So right now, technology is shaping how we use credit cards and what benefits we can get from them. So one interesting thing that is obviously the blockchain technology, which we've heard a lot about, which is a secure way of keeping records publicly, and that is entering the credit card space. So some cards are offering cryptocurrency as a reward instead of cash or points. You might have even been able to use a credit card to buy a bit of cryptocurrency. Then we move on to artificial intelligence, and artificial intelligence is also getting smarter and helping the credit card companies decide if someone should be credit worthy or should not. And then, they're moving away from just looking at credit reports, but actually using that information for an overall situation and maybe predicting certain patterns or habits that might happen in the future. However, while credit cards are not disappearing, instead, we might see the move from a physical card where it becomes less common, and moving towards a credit card within a wallet, or a credit card that is in electronic form. We want basically our wallets to be lighter with less plastic and more digital payments. And thanks to services like Tap to Pay or Tap on Phone from Apple Pay and Google Pay, we're getting closer to a world where we don't need a physical card at all. I'm sure many of you maybe leave your home now with your phone and digital watch, and you don't carry a physical wallet at all. Companies like Visa and MasterCard as well are even talking about cards with fingerprint scanners built in for secure and super easy payments. So there's also some sort of a biometric approach to this, where facial recognition is being used instead of cards, and even microchips sometimes are implanted in your hand for payments. So I'll be covering a few of those, over the rest of the presentation. As economies are going through, various major shifts, going from the physical cash to advancing into a fully digital economy, like the various visions we have in the region from the UAE and Saudi and other countries in the region. Central banks are adopting a national digital currency strategy approach to replace the cash circulation. This form of digitization aims to alleviate certain concerns regarding domestic and cross-border payments and enhance financial inclusion across all economic classes. Banks are also adopting and are pushing to become more digital and less physical. So, I mean, we will start at the beginning with online banking. What it is and what it's used for. So, online banking, as we all now know, and I'm sure everybody here is using some sort of online banking, means simply conducting your banking activities, like checking your account or paying your bills through the bank's website or on your computer. So, and you can usually handle a bunch of different money-related things without leaving, your home, or such as maybe applying for a credit card or a loan. And it's very good for sitting down, making things easy for you at your computer, getting your stuff done from the comfort of your office or your home. Then we leap into mobile banking, which was another transformation from online banking. Mobile banking is simply this, very similar to online banking, but it's being used on an app that is on your phone or your tablet, provided by your bank, with very similar tasks as we discussed. It's designed for people on the move. Regardless of where you are, you can simply immediately, maybe deposit a check through your camera, transfer money, pay bills, and what have you. So people that are constantly traveling, maybe are on the move, get the easy use of this, along with different alerts and fraud detections, notifications. Then we move into the digital banking, and here the difference between online to mobile to digital, and this is a more advanced version where advanced technology processes certain automations using APIs and web services. So it's like combining both or everything that we have in online banking and mobile banking and just making it into one. And that's really what it is. And so in a nutshell, it's online banking and mobile banking together is digital banking. So what are the benefits of digital banking? Digital banking obviously offers a number of benefits for both consumers and business owners. So here are several of them. One is access anytime, anywhere. So you can manage your accounts from anywhere, basically. Better rates and lower fees, because banks are pushing people towards those services as opposed to walking into a branch. So you will be able to avail better comparable prices and stuff like that. And then equity and inclusion. So online banks are helping everyone access banking in communities where there is probably a hardship in getting many physical branches to cover large areas of land. And this is great for people who heavily rely on their phones and do not have easy access to regular banking. Some drawbacks of digital banking: nothing comes in trouble-free. One is some downtime risk. So if you're completely relying on your online banking and there's some technical issues or some updates at the bank side or problems in the website or the phone or whatever, you don't have access to your information. Some communities or geographies have maybe an elderly, less tech savvy community that there will be some learning curves there for those who aren't very comfortable with technology. So it might feel overwhelming. And then obviously there's always a security concern with a small risk of someone, getting your username or password or your access. However, online banks and online banking has many security measures that are such as multi-factor authentications and OTPs, and to reduce such risks. So just key takeaways on digital banking. Digital payments are simply ways of paying without using physical cash. Technology is shaping definitely how we use credit cards and what benefits we can get from it. Banks are adopting and are pushing to become more digital and less physical. Online banking means conducting your banking activities like checking your account, paying bills through your bank's website or computer or your computer. Mobile banking is using an app on your mobile phone or tablet, and online banking with mobile banking is digital banking. So we're going to move to the next section of section 2, which is the introduction of digital wallets. And to break it down to you, we'll start with what is a digital wallet. So a digital wallet, or an e-wallet, that some might call it, is a financial transaction application on a smartphone or could be a computer that safely keeps your payments information and passwords on a cloud, so you can have it with you anywhere. So if we move into using this digital wallet, you can shop, without carrying any physical cards. And besides credit cards, a digital wallet could contain like gift cards or prepaid cards or links to your checking account or multiple things. So basically, how it works is when you decide to buy something, use your digital wallet, the information that is stored virtually inside your wallet is then connected directly to that transaction, and it reaches your bank or your tool in order to get that money flowing. So there are different types of digital wallets, and the first one is an open loop mobile wallet. The open loop mobile wallet is a payment solution where it enables users to pay at many different locations or wherever it is accepted, and could be worldwide, different locations from the one centralized digital wallet. They can be connected to a personal account or any payment card, like I mentioned earlier, and does not require any prepaid funding amount to exist in the system. So that you need to top it up in order to use it. Think of, let's say, a closed payments. Think of your credit card like a Visa or MasterCard connected to your Apple Pay, and that you can use it everywhere where Apple Pay or Visa or MasterCard is accepted. That's some sort of clarification. Closed loop mobile payments. Basically, closed loop mobile payments are those that enable users to load money, preload, or top up. So you prepay into a spending account that is linked to the payment device, like a gift card or a specific company. It could be a brand that has multiple branches or have multiple sub brands, and you can use it within that ecosystem. A pass-through wallet is a thin e-wallet, basically, which does not hold any funds directly into that wallet. So let's talk about more examples like global players like PayPal, Apple Pay, Google Pay, Samsung Pay, and some in the region here. STC Pay, you might heard about it out of Saudi, Pay it in the UAE. And it's worth mentioning that I'd like to deep dive into the Apple's fintech ecosystem, because Apple seems to be the world's most valuable tech company, and now it's becoming the leading fintech company in the world. And we might know it as a phone manufacturer or a laptop manufacturer, but it's definitely very well known and renowned for its products and services. And now has taken a place leading the fintech world. So Apple has created an integrated software ecosystem that seamlessly connects all its devices, allowing the users to enjoy the benefits of the Apple products. So they have Apple Pay, Apple Cash, Apple Card, Apple Pay Later, um, savings accounts, Apple Care Plus, Apple Tap to Pay. These offerings have enabled Apple to not only dive into the realm of fintech, but actually dominate it, given their big user base. So Apple's fintech efforts include the embedded finance layers, where it encompasses the outsource, co-creation, collaboration, and in-house built solutions. So by leveraging their partnerships and providing a robust customer relationship, Apple was able to efficiently transition from being that tech company to an actual bank. So by integrating their financial solutions into an already robust, reliable ecosystem, it further solidified its place as a leader in this major industry. Now, also, it's very important for us to mention the peer-to-peer payments, or P2P payments, as some of you might know them. Peer-to-peer or P2P payments are becoming the most popular type of fintech solution when paying for goods or services. Instead of using cash or checks, you can now transfer instantly from your bank account or credit card or a payment app directly to someone else's bank account or app. You might have heard in the US of Venmo and PayPal, obviously, and they are very popular P2P payment platforms, and they're very popular also among consumers for their convenience and speed of transferring that money, and security, obviously. Similar to them in our region, there is Click in Jordan. There is Annie here in the UAE, and IPN in Egypt, and among a few. Obviously, there are others. So where banks lacked P2P payment providers have stepped in to facilitate that, those things that are more convenient for users. So unlike transferring funds from a bank account to another, and sometimes taking a few days, P2P payments came in, and you were able to instantly transfer and pay others in a heartbeat. So key takeaways for this section would be, digital wallet basics. We covered the digital wallets or the e-wallets as a financial transaction application. We talked about the difference between open loop, closed loop, and pass-through wallets. Open loop wallets are wallets that are accepted everywhere in different locations. Closed loop are more specific to a certain brand or a certain ecosystem. And pass-through wallets, the likes of Apple Pay and Google Pay, where they have the ability to link a certain fund source to that transaction. And then we talked about Apple and how they created the integrated ecosystem to seamlessly connect all their devices and users to enjoy the benefits of paying within their ecosystem and elsewhere, by collaborating with other financial institutions and dominating the fintech world. At the same time, we talked about P2P payments and how they're becoming the more popular fintech solution for paying goods and services instantly. The next, we're gonna talk, now that I think we've covered all the elements of surrounding digital payments and their history and the digital wallets. So I think we're gonna deep dive now into what is called contactless payments. So how can we define contactless payments, and where do we go from there? So what are contactless payments? Contactless payments are a secure form of payment that uses an RFID technology or a near field technology or an NFC, rather than swiping a card on a point of sale terminal or plugging it in for a chip and pin. It works by tapping the card or hovering your smart device over the acceptance device or a point of sale device. It's also referred to as tap and go payments or tap to pay. So the okay. So basically, most of the region here has moved towards tap and go in many instances. Another way of having cashless payments is QR codes. And it's very popular, and definitely I remember in the chat we had people from India, and this is a very popular form of payment in India among many other countries. They simply work by scanning that code or QR code, and it will immediately lead you towards the payment portal. So from restaurant menus to virtual business cards, QR codes are being used everywhere. They originated from the supply chain industry and are now used throughout the merchant landscape, and now in payments most recently. As companies and consumers have grown increasingly comfortable with QR codes, more companies are adopting them for contactless payments. Today, 4% of consumer transactions globally use QR codes, and that number is expected to increase at a compounded annual growth rate of 16.1% by 2030. So many more merchants are deciding to offer QR payment options to help them make payments faster and easier and more accessible for their customers. They may partner with a QR code payment provider to create their own code version or personalization for that. Four key features of QR code payments that benefit merchants and customers alike. Contactless payment experience eliminates the need for all the cards or money changing hands. It's faster from a service perspective, settlement perspective, so it enables immediate payments and convenience between all the institutions. It is affordable and accessible. It's a very low setup cost, very low ongoing transaction costs, and it offers also in-person selling, where a quick way to direct in-person customers to an online store, a checkout page, maybe in such restaurants, you can read the menu using the QR code and then add to the basket whatever you need to buy. So they're very useful also in pop-up shops, maybe in an exhibition of some sort, or mobile selling, professional services where that only sell a handful of items or products at a single event or single point of sale system. So moving on from QR codes, another form of contactless payments is payment links, and a payment link serves as a clickable or scannable code that enables customers to finalize a purchase seamlessly. So available in the form of a digital link or buy buttons, or sometimes QR codes as well. These links find applications on websites, social media platforms, apps, and messaging tools, and also in-person transactions. So upon clicking that link, customers are immediately directed to the merchant's checkout page, where they can complete the desired transaction, whether it was a one-time invoice payment or multiple transactions through a buy button or a subscription of some sort, or a social media platform. So what makes those payment links stand out is their simplicity. They facilitate easy online payments without the need for additional infrastructure or website or any coding as such. So any merchant can seamlessly generate a payment link, share it, and guide their customers to their payment page or checkout page for completion. And obviously they can use it on the various messaging apps like WhatsApp and chat and what have you. So the benefits of these payment links are pretty straightforward. They accept payments seamlessly via sending a link on a text or different social media platforms. Choose the right link for your platform, so you can customize your purchase experience by selecting variable forms of those payment links, whether they were dynamic or static. Also provide diverse payment options. So with that same payment link, you can give the option to pay via credit card, debit card, wallets, anything. And you can also simplify that payment process, because all they have to do is just click on that link and just go through the process of paying. So what are real world uses of this? You can embed it into emails and texts. You can put it on a blog or maybe an Instagram shop or comment or chat, WhatsApp, all these different kinds of things. So just key takeaways on contactless payments. They're a secure form of payments that works by tapping a payment card or hovering a device over the acceptance terminal. It also is referred to as tap and go. QR codes or quick response codes are a popular form of payment, and it's growing worldwide. Payment link also serves as a clickable, scannable code that enables customers to finalize their purchases. So we're gonna jump into the fourth section, which is the integration of payment options within social media and messaging apps. So when you think about social media apps, we usually picture platforms that mostly engage in entertainment, maybe news, education, and provide a platform where people can connect, follow, and post and like things that they are drawn to. But we are now in an age of social commerce, with very notable social media apps integrating into the digital payments and digital wallets as part of their features. So with that, we're going to talk about social media apps that integrated. Just a few examples. Obviously, Meta, which is Facebook, has launched Meta Pay in some countries and can be used across Facebook and Instagram. While this feature is only still available in a lot of parts of the world, it's not available in the UAE or our region yet. Meta Pay is an easy way to secure and conduct payments between the Meta apps, Facebook and Instagram infrastructure. In a world where maybe opening a bank account requires an in-person visit and plenty of documentation, Meta provided and prides itself about providing the accessibility in a very simple, open Facebook, add your payment information and create a PIN and you're done. So easily add your credit cards as well later on and what have you. So transactions that they support, such as sending money to family or friends, go directly from your bank account to theirs, and what have you. Then on the Instagram payments, it's very similar to the Meta. It's almost one. And then WhatsApp as a payment system, much like Facebook Pay or Google Pay, offers convenient instant money transfers for friends and family. While WhatsApp Pay payments features are being rolled out in more countries, and as time goes on, they will become an alternative payment method or transfer method if you want to receive or send money. Right now, it's in the US and it's rolling out. So we're going to move on to social commerce from here. Social commerce is a rapidly growing branch of e-commerce that uses social networks and digital media to facilitate transactions between businesses and their customers. I'm sure many of you go on Instagram, maybe follow certain brands that you like. You'll find a certain thing, you click on it, and you get the prices and what have you. So it encompasses activities such as product discovery, reviews, ratings, sharing, recommendations, transactions, and loyalty programs. Social commerce has been rapidly growing over the past few years, thanks to the increasing popularity of social media platforms, obviously, such as Instagram, Facebook, YouTube, TikTok, and even X, which is formerly Twitter, as you know. According to a report in McKinsey, global sales from social media channels has reached 37 billion in 2021. And the projections is for that to grow and increase to nearly 80 billion in 2025. So that's not too far off in 2 years. So shoppers are turning to social networks for product recommendations from friends and family and influencers who have already tried the product or purchased the product, and they're looking into considering buying it. So social commerce provides also enhanced customer engagement and offers shoppers valuable product recommendations and insights through interactions in the comment section. Social commerce works by enabling customers with a brand or a business on their preferred social media platform to interact directly. These interactions include sponsored posts and news feeds, maybe banner ads, and posts to allow direct placement of products into a shopping cart on a site. So companies can further enhance their engagement by providing exclusive deals maybe to those social media followers, offer unique codes for specific channels. The core of social commerce lies in collecting and evaluating the customer's data. And that's very important from various interactions. So by mining that data from the sources, like the website visits, the comment sections, and the Q&A boards, companies gain insight into their target audience interests and preferences, and then they use that to target them. And this allows them to precisely tailor the offerings to meet the customer's expectations, and thus increasing the engagement and increasing the spending and boosting their sales. An illustrative example of this customization is the generational marketing, where companies use the right marketing channels and messaging to effectively reach a specific age. And I believe this is only the beginning of what social media has to offer in terms of facilitating payments. And in the next sections, we're going to talk about super apps and their role in the digital payments. So key takeaways, the Meta and WhatsApp both have launched payment platforms within their ecosystem. Meta for Facebook and Instagram, WhatsApp for person-to-person instant transfers, and social commerce is rapidly growing as a branch of e-commerce that uses the social networks and the digital media to facilitate transactions between businesses and their customers. Now, next section, we're going to move to section 5, which is about super apps. And what is a super app? So a super app employs a one-stop destination to do just about anything. So in many cases, a single user app, super app, can enable you to chat with your friends, book a taxi ride, make a doctor's appointment, shop with a virtual assistant, maybe buy insurance products, do some payments, and so much more. So the most important factor to know is that it enables online payments just like any other social media app. Popular super apps are, one of the most popular ones is WeChat out of China. Now it is an integrated app that has a full ecosystem that allows shoppers to chat, browse, make payments all in one place, making shopping as easy as chatting with your friends. So it offers a swift payment experience for users through quick pay, QR code payments, in-app payments, web-based payments, native payments app. Another super app example from the UAE and across over our region is for Kareem. Kareem is an integrated now e-wallet and peer-to-peer has peer-to-peer transfers in the UAE as well. Customers are able to send and receive and request money from their phones by using the Kareem app. The digital wallet stores credit and debit cards and then links it to payment gateways to allow the purchases of different things. The money is stored in the Kareem Pay wallet and can be withdrawn from any UAE bank account. So also with the Kareem Pay wallet, you can pay bills from various entities in the UAE, such as the phone bills or the toll road or the metro and what have you. So it is both examples are examples of super apps that enable you to do everything without leaving that one app. Key takeaways on super apps. A super app employs a one-stop shop destination to do just about anything. In many cases, a single super app can enable you to chat with friends, book a taxi ride, and doctor's appointment all at the same time. The most popular super app in the world is WeChat. And we can also give it some regard as an e-wallet. In the UAE, Kareem has crossed over to becoming a super app and is growing its services within that. The sixth section is the overview of biometric payments, biometric payment technology as a form of payment. And this is the final section of this course. And now that we've covered the various payments, including digital payments, contactless payments that can be done with a smartphone or a smart wearable device. However, what lies ahead in payment technology while leveraging that familiar payment method is biometrics. So what is a biometric payment? Biometric payments entail validating a card payment through your fingerprint, a concept likely familiar if you've unlocked your smartphone or accessed an application using this method. The use of fingerprints instead of traditional passwords is growing in various digital interactions and is extending to card payments. Instead of inputting a chip and PIN code, you can now tap your card on a payment terminal and utilize your smartphone, either fingerprint print scanner to authenticate or your Face ID to authenticate. However, there are more ways than using a fingerprint to conduct payments. So types of biometric payments, fingerprint payments, which we talked about, involves the users getting their fingerprints on their mobile devices, creating a secure identification template. During payments, placing that registered finger on the phone sensor or sometimes now on the plastic card itself. Widely used mobile wallets such as Google Pay and Samsung Pay, use fingerprint payments. So financial institutions have integrated the fingerprint authentication into mobile banking apps, offering quick and safe access without the traditional passwords. The other form is facial recognition, and this face recognition technology authenticates payments by registering the unique facial features and matching them during the transactions. So users enroll their facial biometrics, and a camera or sensor scans their face, confirming the match in real time. And facial recognition payments are obviously employed in mobile wallets like Google Pay and Apple Pay, in retail stores, in airport security as well, and provide a fast and secure transaction. Voice recognition also uses a unique vocal characteristics to verify transactions. Users register their voice prints, capturing distinct vocal patterns. During a payment, a voice sample is matched to the stored voice print through advanced algorithms, and efficient contactless payments can happen. The latest thing that is being now in the early stages is the microchip implant. So the fourth method, which involves a microchip of payments that is implanted into the user's maybe hand. This microchip contains all the necessary banking information and is about the size of a grain of a rice. And it's growing in popularity. Microchips under the skin, offer a convenient payment method, allowing users to pay with a wave of their hand. Beyond payments, also they serve as identification, unlocking technologically enabled doors and transfer personal information and what have you. So the adoption of biometrics in payments is expected to continue to grow. Over 80% of smartphones worldwide now have built-in biometric capabilities, whether it was thumb, fingerprint, or face recognition. So biometric authentication is projected to secure over 3 trillion in mobile payments by 2025. So obviously it has advantages and disadvantages. Some of the advantages are, enhanced security beyond passwords and contactless methods. So also swift transactions for efficiency. The speed at the process completion is quite fast, and seamless integration with the point of sale devices or infrastructure, where biometric credit cards can work seamlessly without having to work on the existing infrastructure. Some disadvantages, obviously, privacy issues. The collection and storage of highly personal biometric data, raises concerns for misuse or compromise. So some customers might be weary about using them. Implementation expenses for small businesses adopting biometric payment systems can entail significant costs in infrastructure. Challenges in the regulatory compliance, and that's navigating the different complexities of data protection regulations within the different countries. That could be very intricate for small businesses. So the key takeaways here are the biometric payments entail, validating a card payment through your fingerprint or any other biometric validation. A concept likely familiar that if you've unlocked your phone recently using biometrics, and the other takeaway is we have 4 biometric payment methods right now in the market: fingerprint, facial, voice, and microchip. So with that, we reached the end of this presentation, and in the Q&A and in the chat, please feel free to have any questions, and I can definitely address those. I think we have one. Okay, so we have a question from Mahmoud saying, for your gateway, do we have to be incorporated in the UAE or Saudi, or do you offer it in any region? Do you offer multiple currencies? For our gateway, yes, you have to be incorporated in UAE or Saudi, but we cover many regions from the UAE and Saudi, and I'll give you some more insights about that. Okay. What is your difference with Stripe? The difference between Telr and Stripe. Telr is a UAE-based regional payment gateway that is fully customizable, and hyper-personalization is available. So we support multi-language, which Arabic is supported for our region, as well as all the currencies in this region. And obviously, price is a big difference between us. So we are more of a boutique payment gateway with boutique services. So I'll just answer a few of the QAs. Okay. Another one, are you integrated with Wio? We don't need to be integrated with Wio. So if you're banking with Wio, we can settle in your Wio account easily. There's no issue. We can settle in any bank account that you might have. Okay, so we have another question in the QA by Dr. MA. He says, educate us on selecting tier plans. Is it based on business size or other criteria? If you're referring to the Telr tier pricing plans, it's basically you don't have to select. So it depends on your volume, and those tier plans you just swift through them. So the pricing and the tier plans changes based on your volume. So you don't have to worry about selecting anything. Can Teller transfer funds to an offshore or UAE accounts only? Well, this is a very, it's a vague question, but we work with licensed banks in the UAE, and it just depends on the situation. But in the general answer is we only work with UAE banks. Is there any platform support limitation like WordPress, Shopify, or any kind of information? This question is from Anas. Anas, no, we do support all kinds of platforms. We don't have any limitation. And if there is a platform that we've never heard about or never worked with, we do have other APIs that connect to it. So that's not an issue at all. Any other questions, ladies and gentlemen? What I'll do is I'll drop my email here. If you have any questions, please feel free to email me. I'll also drop in my LinkedIn, so you feel free to connect to my LinkedIn, and you can also send me questions there. Just give me a second. All right. Okay, great. Thank you. Creative Zone also added some information of how you can contact me, our website, and if you need anything more. I believe post this session, you should receive an email with the presentation, and please feel free to reach out. Right before I end, do you have, there's one question from Dr. MA saying, do you have any affiliate marketing policies with firms empowering startups? Absolutely. This is part of our normal or business as usual, where you can sign on an affiliate marketing referral agreement with Teller, and you can refer business to us, and obviously there is some sort of a kickback to you. So that's definitely there. It's on our website. You can get it through there. You can email me to get it started. How safe is voice recognition payment in the AI era? I agree with you. It's not very safe, and that's why I don't think the adoption has kicked up and picked up very quickly. And I don't think that voice recognition would go further than where it is today. So I think, but there are certain ways to secure that. So the source of that, if you're using, for example, WhatsApp voice notes, there are certain ways where you can use it to adjust to that. So one of the things that we've seen on WhatsApp chat is you can send a voice note asking for certain account information and verifying your voice and your entry point of that voice that was sent. They're all verified securely, and then that information comes through. But thank you for the question, Boom. All right. If there are no other questions, thank you very much, everyone, for your time, and I hope this was useful information. And we remain here at your service at telr.com, and my email is in the chat. Thank you so much, and have a beautiful day.